Good morning. This is Mary Ellen McGonigal, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the markets. And there's certainly been quite a bit of action. We're having a really, I would say, exciting earnings season here. And of course, that's been driving quite a bit of the action in the markets here recently. We're in the throes of a rather robust earnings season, given what the expectations were going into this new year. And this week, we have another very robust week with close to 400 companies due to report their earnings. So let's go ahead and get started. I'll be reviewing what we're going to be going over today. The first item, as usual, we're going to take a look at the current markets. Where are we with the broader markets? Are we in a confirmed uptrend? You want to make sure that you have a good feel for where the markets are, where they may be heading, and all of that is going to help you formulate your game plan, not only going forward for this week, but beyond. So we're going to take a look at where the broader markets are. We're also going to look at some positive stocks within defensive groups, and I'm not going to spend a lot of time with this, but the concept here is that we're into what could be the 6th week of gains in the S&P 500. So you may want to counterbalance some of those faster moving growth stocks. So we'll take a few minutes there. Also, we're going to look at some stocks that are due to report earnings this week. I've selected a couple of names with an eye toward looking at how the markets have been behaving and responding to earnings, and how you can potentially keep an eye on these stocks as they go into their earnings. I'm not a big believer of buying ahead of earnings, but if you own these stocks, or certainly you'll want to keep an eye on them after they report, if they come in with some positive numbers. And then also how to find leadership in the current markets. There are some pockets, some areas, and certainly today would be a prime example. We're seeing technology stocks rally, a lot of leadership names within there. So we're going to show you within StockCharts.com how you can very easily pick up on where the leadership is. So let's go ahead and get started. We want to take a look again at where the broader markets are currently. So the first item we're looking at here is a daily price chart of the S&P 500. And what I've done is overlaid some simple moving averages on top of the price chart, and then also some indicators. Up on the top, I have what's called an RSI. This is a relative strength indicator and a momentum indicator. The usefulness here is keying in on the position. Is it above this net neutral 50? And also, is it trending upward? And yes, so we are getting positive signals from that RSI. We can go back to that 2018 period, certainly July into October bullish, and we had that very same characteristic there with the RSI. But let's go ahead and drill down to these simple moving averages. I'll tell you the relevance here. The 10-day simple moving average, that's your green line here. The red is the 50-day simple moving average. The blue is your 200-day simple moving average. And the key here is you want to see the broader indexes have and maintain a presence above these simple moving averages. So we reached a low recently here back in December. And your first sign of positive action was when the index broke back up above this 10-day simple moving average. But really, we were not out of the woods until we broke up above this 50-day simple moving average. We did have what's called a follow-through day back here. Our work it was identified on January 4th. So from our work at MEM Investment Research, we advised clients that it was okay to get back in the markets, but beware of the action here. But the index did in fact break above that 50-day simple moving average. This was your first area of potential resistance. So we're in the clear. Your next area of possible resistance is this 200-day simple moving average. We want to break back above that to retain this bullish uptrend that occurred at the beginning of January. But for now, the uptrend is very much intact. We want, again, to see it break up above. We did get that break above the 200-day simple moving average on the Dow Jones Industrial Index. So I'm just going to take a minute to show this to you because it is rather relevant. It occurred last Thursday. We saw a lot of stocks. There are a couple of stocks within the Dow Jones Industrial Average that had a good week last week. Boeing certainly would be one of them. A number of energy stocks rallied, Apple. So we did see this break back above this 200-day. Now, it was not super decisive, and but we are above it, and that is very bullish. So let me just take one last look here at the S&P 500. The stochastics is another technical indicator that is really quite powerful as far as identifying reversals, certainly within indexes. We want to key in on the slope again, but as the stochastics break up above the 50, and we can see that that occurred in line with the S&P breaking up above that 10-day in a bullish action. But we also can see that the stochastics are up above this 80 line. They're in an area of what is called overbought. Again, we've had 5 weeks of upward gains within the S&P, so there's certainly an anticipation that it could very well be overbought. But we want, and which is fine, it can remain overbought for any period of time. Certainly we've been overbought going into 2019, but what you want to key in on, or in essence look out for, is the potential reversal. If that stochastics turn over, break down below that 80, and even more importantly, break below this 50. And you can see going back to this October period, certainly when this occurred, and actually we can go back here to this late September period, so it can be quite indicative. So let's go ahead and move on. I talked about how we can identify where strength is certainly within the broader market. So let's go ahead and take a look at another view here on StockCharts.com, and we can easily take a look at certainly some of the preset screens that are here on StockCharts.com as a way to, again, get you in front of where you want to be, where the stocks are that are showing strength. And so by that, I mean these are going to be areas that are, let me just go ahead back up here. These are going to be areas of the market that are, oh my gosh, certainly exhibiting strength by hitting new highs in price. Perhaps they are gapping up. So what we can do here is go ahead within stock charts and access some of these preset screens that they've already put in place for you. And these preset screens are really quite powerful as far as helping you identify, again, where that strength is in the broader market. So as you can see, I am trying to get into some of these already set up screens that are here for you. As we scroll down within this particular area here, we can, I apologize for this. Let me just go ahead and see if I can go ahead and access it using a different view here. So what we want to do is go ahead up to here. And the first item that I'm going to go ahead and show you is what's called the candle glance. And this is accessible from that front page interface. I was just having a little bit of difficulty as far as accessing it, but it is very easy to, from that interface, to go ahead to what's called the candle glance view. And what this is providing you with is a very nice snapshot 2-month view, and initially it will be populated with various sectors and indices. But what I've done is gone ahead and populated this with various indices and sectors that are really relevant to what's going on currently in the broader markets. So what we are looking at down here is at the bottom is where you would go ahead and populate this candle glance. So I put in here the NASDAQ, the Dow Jones Industrial, S&P 500, also some of the ETF showing the sectors. So XLI is going to be industrials. We're also looking at TNX, which is the yield on the 10-year. That's been really quite relevant recently, and then various other sectors. So what we can do from here, and I've already done this, is go ahead and add an indicator. I've added the RSI, that relative strength indicator. I want to see where the strength is, and then sort it by descending. So we have strength to weakness, left to right. So up here in the upper left, I have the strongest group currently, and that's XLRE. And for those of you that follow the markets closely, you may have noticed that real estate REIT stocks have been super, super strong. And that has a lot to do with, down here on the lower right, I have the 10-year yield. Take a look at how this yield, this is going back 2 months, and we can see the very clear-cut decline that we've seen in 10-year yields. A lot of these REIT stocks are offering high yields to those that invest. They pass through the their funds from operations, their earnings to the investor. So within the XLRE, you'll see a lot of stocks that provide yields. So that is this first grouping. Then we have industrials as the second strongest area. We did see a lot of industrial companies come out with strong earnings. We're going to be reviewing a couple of them here today, but certainly Boeing is a standout one, and a number of aerospace defense stocks that really came in quite strongly. Small cap stocks have really been doing quite well. This is a bullish sign for the broader markets. The reason is a lot of small cap stocks, they tend to be quite volatile. A lot of people view them as being risky, and certainly strength in that area bodes well for the broader markets because it indicates confidence. Investor sentiment is bullish, so small cap stocks are doing well. So then we can certainly move on. Technology, and today we're seeing a nice rally certainly in some of the names here. Take a look at energy and XLE. This has everything to do with oil prices. We saw a 17% increase in oil prices in January, and that's the strongest January that oil prices have had on record. So subsequently, we're seeing energy stocks really outperforming. XLP, surprising strength in some of these consumer staple stocks. They're coming out with earnings. This also has a lot to do with cannabis and some of the areas, some of the certainly tobacco stocks that are behaving in a bullish fashion. So this is where the strength is. It's one of the easier ways for you to go ahead and get a sense of where the strength is sector-wise. From there, you can go ahead and drill down to those various sectors and get a sense of stronger names within that. But let's go ahead and take a look. I want to just take a minute here to review stocks that are due to report this week. So let's go ahead and take a look at a very well-known name that reported last week, and that is Facebook. And take a look at this gap up on that earnings release. And we can take a look really at any number of stocks that reported last week. And let's go ahead and redo that. Bank of America is a prime example as well, but this is Boeing. So we can see what happens here, and we're seeing this in a number of stocks where they're coming in with earnings estimates, earnings that are ahead of estimates, and the stocks are gapping up in response. So that gap up is really a signal, a sign of strength. We can see that the volume super high. This is another sign of strength because institutions are coming in and supporting that stock, and we can see the stock is continuing to advance beyond that gap up. So this is a preset screen that you can run on StockCharts.com, and it will show you those stocks that are gapping up on a given day. So what I'm going to do here is go ahead to this members dashboard, and this is the area that you will want to go ahead and screen for that. I talked about those preset screens that are in here. And what we can do is go ahead to these predefined scans as a way to embrace on a regular basis where the strength is. So these screens are already preset for you. And what you can see on the upper portion here are bullish screens. So stocks that are hitting new 52-week highs, this is a very strong sign for given stocks, because as stocks advance and hit 52-week highs, they don't have what's called overhead supply. They don't have people that purchased it recently that are looking to exit. So once you go ahead and enter a screen such as this 52-week high, you can go ahead and sort it by scooter, SCTR. This is a technical based rating, but it really is very, very powerful. I can tell you, I run a lot of screens on a very regular basis, and I'm looking to uncover that next big winning stock, uncover where the strength is. And when I run these screens and then come over to StockCharts.com and look at these scooter, all the stocks are there for you. This is doing all the work for you. So we can take a look, for instance, at AMSC. This is a small semiconductor stock that is hitting a new 52-week high today. And it's very much in a clear-cut uptrend. We can see the stock finding support at an upward trending 10-day simple moving average. This RSI is trending positively. And then if we take a look down at the bottom, we can see that the MACD, this is another indicator, a moving average convergence, divergence. It's up above this 0 in a positive fashion. We've also had a positive crossover, the black line up through the red. And this stock is actually due to report their earnings after the close today. So they're acting rather constructively going into their earnings, which is a positive sign. We can take a look at another, WDAY. This is a stock that reported earnings last week. We can see this very decisive gap up in response. And actually, they did not report earnings. They gapped up 5% as analysts raised estimates for this year. So the stock is not reported quite yet, but it's acting very bullishly. This gap up and then adding to that as it's finding support at this upward trending 10-day simple moving average. So you can see that's one way. We talked about these preset screens and the ability to get in front of stocks that are exhibiting strength. So one of the other preset screens that we have here for you are these gaps up. And again, these are clear-cut signs of strength. So let's go ahead and take a look at some of the companies that are due to report today, or actually this week, and see what potentially kind of clues we can get from some of those. This is FCAU. This is Fiat Chrysler. Now, what I wanted to point out to you as well is some of these stocks that are gapping up. We saw Facebook. Apple would be another prime example of a stock that gapped up on earnings, but we can see really how beaten down Apple was from its peak back here in October. So really any kind of good news is being met with really quite a bit of support. Buyers are coming in. The stock is continuing to trend up today. So when we look at a stock such as FCAU that is due to report, Fiat Chrysler, we can see, in fact, this is another stock that really has been beaten down, has not done well in the broader markets. So it is with an eye that any kind of good news could potentially be well received. They're due to report on Thursday. Analysts are revising estimates up, but we're not out of the woods here with this stock, because we can see this downward trending 200-day simple moving average very well could easily act as resistance to the upside. And that really is true for any of these stocks that are gapping up, such as an Apple. While it is advancing now, it looks really quite bullish. We can take a quick look at it because it is quite topical. It's broken up above this 50-day simple moving average in a bullish move. Take a look at the volume here. Very high. Institutions are coming in. Your MACD is up above this 0 in positive fashion. RSI trending upward. So we're in a bullish phase. However, it could very well trade from this 170 up to 190. And in fact, that very well may be the case, but you're going to want to see how it behaves here. This could act as resistance. But let's take a look. We talked about it, and hopefully I'm not jumping around a little too much here, but FCAU is due to report today. What I wanted to point out to you is another auto stock that reported last week. This is RACE, Ferrari. The company came out with earnings. They had a 47% net increase in they're operating in their earnings, and we can see the stock price really gapping up here. So this has everything to do with this particular stock. It is Italian or Italy based, and they had a big tax break. But also Ferrari is introducing 5 new models. They have a lot of bullish action in addition to, or certainly fundamentally sound reasons for that big gap up. But now the stock has broken up above this 200-day simple moving average. While it could very well pause given this big advance here, it's certainly in a much more bullish position, because now we have your shorter term simple moving averages. Your green 10-day, your red 50-day are beginning to trend upward in a bullish fashion that could very well support a continuation of this upward move. Let's take a look at another company that's due to report this week. This is Laboratory Corp. LH is the ticker symbol. It was a big winner last year, certainly going into August before it had a significant decline. This is another stock that really has underperformed the broader markets. It's got totally beaten down. But what I wanted to point out to you is that it did break up above this 50-day here. Going into the release of their earnings, analysts are raising estimates higher going into this year. This is not a stock that I would normally traffic in or purchase, if you will, but I'm pointing it out to you because the stock did get so beaten down. It's with an eye toward any kind of good news. We could see the stock advance up to this 200-day simple moving average. One other stock that we can take a look at that is due to report this week is an airline stock, SAVE. This is Spirit Airlines. This stock is much more constructive looking in the sense that it has broken up above. This is taking us back to this December period. This company came out with very good news as far as their traffic, their load factors, very bullish. And so the stock moved very much in advance of the broader markets. So what we can see here is the stock is up above this 10 and 50-day simple moving average. Again, we're going into earnings, but it is behaving in a bullish fashion ahead of earnings. Analysts are revising already very strong estimates for Q4 as well as for all of 2019. They're looking for 50% growth as far as earnings. So any kind of good news, this stock on their earnings, they're due to report on tomorrow, we could very well see this stock advance further. So we talked about gaps up. I wanted to spend a minute and just review some of the stocks that gapped up last week and take a look at their positive, their potential. So we certainly saw Apple gapping up, continuing to advance. We can take a look at another stock that reported at the end of January 24th to be exact. This is Xilinx. The stock gapped up 18% on super strong earnings. And what I wanted to point out is we'll take a look at a couple of other examples as well. But in this example, what we can see is the stock gapped up here in price. It advanced further. Take a look at the volume on that gap up. When you see a stock gap up in response to whether primarily, oftentimes it will be on earnings, and we can see when the volume comes in really just exceptional relative going back historically. And when that occurs, again, institutions are in there supporting the stock. There's with an anticipation that there's still more buying ahead. And we have seen that the stock has very much advanced subsequent to this initial gap up. But now we're in a phase or a period where the stock appears to be pausing. And that is very, very normal. Take a look at the RSI. RSI, once it gets up above this 70 line here, it's indicating that the stock is overbought overbought. Now it can remain in that overbought period, but let's go back here historically to the September, and we can see that Xilinx back there also got into an overbought position. And what you want to key in on down here is the stock really just rested and did not particularly decline. So we were fine there, but it is giving you a sense that the stock very well may pause. So the other indicator you want to take a look at here is the MACD. The MACD is positive, trending potentially sideways, but you're still in good standing. So oftentimes a stock will pause, wait for that 10-day simple moving average to catch up, and before advancing further. We can take a look certainly at Boeing. This is a prime example that we looked at briefly as far as a stock gapping up in response to strong earnings. Take a look at the volume there, and we can see that the stock did pause certainly for the next 2 days before advancing a bit further today. We can see that the RSI is up here in an overbought position. Again, it can remain up there and not get in trouble, but what you want to watch out for is if this RSI does eventually trend downward and cross below that net neutral 50 in line with a negative MACD. The MACD crossing down below the red is your first negative sign. Then as it breaks below that zero in line with an RSI trending downward, as the stock breaks below key moving averages, this is all quite negative. For now, we're in good standing. We're overbought again, which is fine, but just always be on the prowl for those negative potential signs. Let's take a look at another stock that reported last week. Did have a gap up. This is Dover, DOV, and again, nice volume. It was able to, again, after this gap up, advance a bit further. But again, we are in this overbought area. The stock is pulling back a little, and oftentimes, as stated before, this 10-day will catch up as this stock pauses. We can go back historically to July. This was another earnings release for DOV, this gap up. And again, it did advance subsequently to that, but oftentimes it will have what's called this really kind of a back and fill pause period before advancing further. So you want to pay attention to the stock as it performs around this 10-day simple moving average for signs, but ideally you want the stock to continue to find support at an upward trending 10-day simple moving average. One other stock that we can take a quick look at that is also in that industrial area, Hexel, HXL. Take a look at this gap up here on their earnings, and the stock has been able to subsequently advance beyond that. One other thing I would urge you to take a look at with some of these stocks is the intraday. This is a 60-day, 60-minute, 1 hour for HXL, and the stock, here's that gap up on the earnings. So as long as the stock remains above this 50 on the RSI, you are in good standing. You're doing, you're fine. You can stay with the stock. So intraday charts can be really quite helpful for that. And I am going to leave it at that because we're out of time. And for those of you that are active in the markets this week, happy trading.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at The Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.